Hey guys, welcome to a learning video. So in this video I want to give you guys a quick rundown of something that I use to help me determine whether the price of the stock may or may not go up or down in the very, very near future. So we're talking day trading, watching the charts every minute. And again, this is not financial advice. You can practice this on your own. You make a paper trading account. But this is just another tool that I use in conjunction with a number of other tools to decide whether or not the stock is going to go up or down in the very near-term future. I don't tend to day trade a lot, maybe a little bit, depending on the momentum and the hype behind a stock. I'm more of a swing trader, long-term trader, but this might be, you guys might be interested in day trading, so use this and add this to your tool belt to decide if entry and exit points for a stock. So let's just jump into it. It's called the Bollinger Bands. Right now I have mine set up here. We can look at the settings. So this is all in Webull, by the way. We're going to use GameStop as our test guinea pig because the fluctuations and up and down movements of GameStop lately have been crazy. So this is a good example. So you can see a lot of movement in the stock. Anyway, so the inputs, I leave it on the 20 period, 2 standard deviations. What I usually do is I make the upper and the lower bands the same color, and I make the middle a different one. I mean, you could do whatever colors you want. I just chose red and yellow because with all the other indicators I have in my charts, this kind of stands out. But you can make it whatever you want. This is all within Webull in the trading platform or trading section. So let's just go through and see exactly what a Bollinger Band is, what the definition is. So Bollinger Bands are volatile bands placed above and below the moving average. Volatility is based on the standard deviation, which changes as volatility increases or decreases. The bands automatically widen when volatility increases and narrow when volatility decreases. This dynamic nature of Bollinger Bands also means that they can be used in different securities with standard settings. For signals, Bollinger Bands can be used to identify M-tops, W-bottoms, or determine the strength of the trend. Bollinger Bands consist of a middle band and 2 outer bands. The middle band is a simple moving average that is usually set at 20 periods, which mine is. The simple moving average is used because the standard deviation formula also uses a simple moving average. The look-back period for standard deviation is the same as for simple moving average. The outer bands are usually set 2 standard deviations above and below the middle band. Alright, so let's simplify that for a minute here. Close out this. So this is the upper band right here. This is the lower band. This is the simple moving average, basically. So what this indicator is telling you is that you see the yellow line, that's the simple moving average. Based on the volatility of the stock at that moment, the Bollinger Bands are going to determine what price it could jump to or fall to. So the 2 standard deviations, that's the most likely case. So in a nutshell, the simplest way I can put it is the stock should always be moving in the middle of the Bollinger Bands. And the way I use it is, if it's on the bottom Bollinger Band, you know that's on the bottom of the range that the stock should be trading at. When the stock is up towards the top of the Bollinger Band, you know that it's, oversold. It's at the highest part, the most valuable or most expensive part of that trading range. And like the description mentioned, in areas with high volatility, you're going to see a wider Bollinger Band. So this is the market open for GameStop. So you can see here, if we go back a little bit, the market closed. Alright, so the market closed, or the pre-market, you can see it's very narrow trading. See how the bands are so close together? That means there's not a lot of movement in the stock. Stagnant, consolidating, whatever you want to call it. It means it's holding to the simple moving average. There's not a lot of momentum in either direction. Then, once the market opens, that's when you get a huge fluctuation. You know how, if you ever watch the market open stocks usually gap up or they gap down. So in this case, GameStop gapped up, but there's such volatility. There's so many orders. There's so many buy orders, so many sell orders being placed at that moment in time that there was a wide range. The stock could drop or it could go up, and it could go hard in either direction. So that's why you see the Bollinger Bands are so wide here. And if you notice, so it held the upper Bollinger Band. So if you're looking for an entry point here, this is not like the greatest place to buy in, unless you get lucky and it keeps going up, or if you have some kind of fundamentals or reason why you think it's going to keep going up. This is a risky trade. Normally what happens is at the open it'll go up or it'll go down hard, and then at that point it'll correct. So that's exactly what it did here. $95 it hit, and then I guess the people determined that it was oversold at that point. It went outside the Bollinger Bands and it came right back down. So it's also following the simple moving average. So if you look, it started to run away from this moving average, but everything always comes back to the average eventually. So it came back, and then it went underneath. So at this point, what you could do is you could see with the Bollinger Bands, it's very wide here, but you can see it's towards the bottom of the Bollinger Bands. So you know that overall, in general, there's a good likelihood that it's going to revert back to the simple moving average or the middle of the Bollinger Bands. So now if you had bought in over here, you know that you're at the bottom of the Bollinger Bands. So as long as the bands kind of stay similar and they stay straight, you know you're at the bottom of that trading range. And it ended up coming up a little bit, and now you're at the high. So now you're at the oversold part of the Bollinger Bands. Then as the market continues, volatility of that one stock goes down, and you start trading within a narrower range of Bollinger Bands. That's what they're talking about with the consolidation period. See, the bands get very, very thin because there's no volatility with the stock. But that also means that when it's going very thin, you have a greater likelihood that the stock is going to break out in either direction. So, see, we had a lot of volatility. We started to consolidate a little bit. We started trading in the narrow bands. You knew something was coming. And unfortunately for many people, it was a drop. So you got more volatility. Look at all these red candles. This is one big red candle, lots of volume. That's why the bands open up again, because now you have more volatility. So there's more chances for the stock to go up or down. In this case, it went down and rode the Bollinger Bands, the bottom band, and then you knew once you're about here at the bottom band, somewhere at this point, it should go back to the moving average, the middle band, or towards the top. And it did. Look, see? Hit the bottom over here, then we came back up to meet our simple moving average. We came up here and we started getting to the top band. Once you're closer to the top band, you know it's going to kind of go back to the middle, which it ended up doing, and it came to the bottom. So basically, the stock is bouncing in between these Bollinger Bands at all times. And this is a good way for day traders to kind of see, if I'm right in the bottom band, it's going to go back up eventually. I mean, don't know exactly when it's going to go back up, so it's not a perfect system, but like I said, use this tool in conjunction with other tools. So that's all I got for Bollinger Bands, guys. We can always go over other indicators. Let me know if this is useful to you. Give me a like. Let me know that you guys enjoyed this. Please subscribe. I'm trying to grow that. And if you have any comments or questions or any other indicators that you want me to look at, just put them in the comments below. So that's all I got, guys. See you on the next one.